Welcome to Cattle Call, an original production of the Rural Radio Network. I'm Chad Moyer. Cattle Call is brought to you by Wolf Auto, small town strong. Check out their website and get more information. See what's available, wolfauto.com. And joining me once again this week, it's Brad Kooima and Varilek there at Sioux Center, Iowa, as we break down the cattle markets. And, after kind of hitting on the same thing over and over, Brad, all of a sudden, we've got a whole lot of things to talk about, from imports of beef to imports of live cattle, potentially, to, big futures moves and all of this, and a government plan that's supposed to prop up the beef industry. So we've got a lot of things to talk about. First of all, just kind of your thoughts from how we ended on Friday to what transpired to get us to trade some cattle already on Monday. What do you make of that?
It's been an interesting week, to say the least. Chad, thanks a lot for having me on. Yeah, there's a lot to unpack here. We could fill up a lot of time. So last week, cash market, just to summarize a little bit, on Wednesday, we traded some cattle here at 240. As the market started to drift, some late trade last week was 238. And then, of course, you had, the sharp break on Friday. We've had 4 limit down days in feeder cattle, and one of them expanded the limit. We've dropped feeder cattle prices over $60 a hundred in futures. And in some of these sale barns, they broke that much as well. Live cattle over $25. So it's been quite a ride, and a lot of that on rhetoric out of Washington about we need to lower beef prices for the consumer's sake. And I just would say this, let the market do the job of the market. The market will determine what's too high. The market will determine what's too low. Sometimes we don't like that, but this intervention leads to bigger problems in me and a lot of people's opinion, and the uncertainty of it. I mean, if let's say you're a cow-calf guy and you're going to take cattle to a sale barn today compared to last week, you're going to get probably $75 a hundred less for those cattle today than you did last week. That's real, and that's baloney, in my opinion, for their sake, and no different than the live cattle thing. So it was unusual that we traded some cash cattle. I think that the hedgers, because the basis flip, you and I have talked about basis flip here. We had a negative basis from almost all year up until the last little while, and we worried that maybe was a little bit bearish when futures went above cash. Now we're the other way around, where you could sell cash cattle above futures. So those hedgers, I think, were a little more willing to take that 230 on a Monday than they might have otherwise, and they were scared to death of what the overall picture was. So, if somebody was willing to bid them, cattle still make a lot of money at 230. They were willing sellers, but I was encouraged that there was a packer that was a willing buyer, 2 of them actually, that were a willing buyer at 232, which I hope helps to stabilize things a bit here, Chad.
Okay. Now let's talk about the competing headlines from last week, because initially I thought the headline of importing beef from Argentina into the U.S. was the one that was really socked the market. But the longer time goes on, it feels like perhaps the status of the Mexican border and whether feeders are going to come into the United States, that seems like that is kind of the leading headline now, maybe is more important to the market. Is that a fair statement?
I think that's very fair, and I would also squeeze Brazil into the middle of that mix too. In my opinion, the Argentina issue isn't enough to move the needle. That's an insignificant amount in the scope of things. Would amount to, by my math, something like a day and a half's worth of slaughter for us. So I don't see that that's a big deal, other than you mentioned the word headline, and I worry, and I believe strongly that there are algorithms that trade those types of headlines, that they don't have that human element to maybe leaven it down, if you want to use a phrase, like I just did for you, that number really isn't that big a number, but a computer might think it is. But so then you add Brazil into the deal, and from the weekend negotiations, it sounds like it's all but a done deal. Now we'll see. President Trump and Lula, or whatever, the president of Brazil, are supposed to meet this week to sign the deal, and what we're expecting, of course, is and Senate made kind of a show of it yesterday. We're expecting to see maybe that last 50% tariff pulled back off of Brazil, which would allow more grinding meat would come in, which would probably, if he really wants to lower the price of beef, that would probably have an impact on the grinding meat or the hamburger meat the quickest. But I agree with you 100%. The gorilla in the room is the Mexican border. I mean, if you truly wanted to change supply, even at that, it wouldn't change it for 150 days or more. But if you really wanted to change supply, that's probably the most obvious. I'm not a veterinarian. I'm not a scientist. I have talked to a number of them here over this last several months, trying to understand the challenges of this issue. And I think this issue, Chad, is much more political than it is scientific. I really believe that there is a scientific protocol that would safely allow those feeder cattle to come across the border. But so we'll see. It's not up to me. Secretary Rollins has made such a big deal out of how high risk and we got to protect that it still feels like it would be later rather than sooner, and maybe not until colder weather. But a lot of headline stuff and a lot of uncertainty. And unfortunately, uncertainty is typically bearish cattle because the long speculator says, I don't want to be in this thing.
So as far as the plan that came out from USDA, and I think there were 4 or 5 big broad elements to the plan. Are there things in that plan that are good or that could be useful to the cattle industry? I think there was some discussion about regulations and, some things like that do happen domestically. Are there good elements in the plan?
Yes. A couple of them, I thought. Wanting to drill down and spending some money on making sure we have competitive markets. Specifically mentioned the contract library, which of course I'm proud of because I was part of the Iowa delegation that finally got that vote through a number of years ago in the NCBA. Transparency, right, about these formulas to try to give more transparency on that. So I was happy with that. Less regulation, my political view would support that. Less regulation, we got plenty of that. Allowing grazing on an extra 5 million acres makes sense to me too. So that, and even irony of earmarking some money to help small packers cracks me up a little bit. Actually the problem is we don't have enough cattle. It isn't that we don't have enough packers right now, but I mean, from a longer view, maybe that's a good thing to help some smaller packers to try to compete. It's going to be an uphill climb, of course, with the big four controlling 85% of the pie. But so there's some elements of it that I think were positive, but I didn't think any of it that was a short-term fix. If you really want to lower prices for the consumer, no, I don't think that there was anything in that really lit a light bulb for me.
Okay. We had a really good question that was submitted, and it kind of ties into this because we talk about the shortage of cattle, and you just mentioned it there. The problem is the number of cattle that are available. We had a listener and a viewer put this comment in. Seems like the sale barns are full every week, and a particular individual is in Oklahoma. So the question is, where's the cattle shortage? If you're seeing a lot of cattle at sale barns consistently, where's the shortage? What do you say to that, Brad?
I trust that this guy has got an informed reason why he must be going to particular sale barns, and I certainly wouldn't discount that what he's seeing is maybe accurate for his area. But I would say that I would guess though that statistically he is in an outlier, and I don't know if maybe there's been a shift in his area away from country trade where they direct trade right off of a ranch, for instance, and that there's more trade being done at sale barns. That movement has started. There's less cattle that go into the videos and more cattle that are going to these sale barns as well. But I'm afraid I got to go with statistics. And unfortunately, here's some year-to-date stuff. Year-to-date steer and heifer slaughter is down 9.3%. It's the end of October. So year to date, we're down 9.3% on steer and heifer. Total cattle slaughter is down 8.9. That would include the cows in that number. So there's less cattle, and maybe not in that particular sale barn in Oklahoma, but there certainly is less cattle domestically. And a lot of that, of course, is driven, number one, by the smallest cow herd in 75 years, but even more significantly is that the border's been closed. And so you've now probably up to 800 or so thousand cattle that we would have had on feed coming from Mexico that haven't been able to cross the border here since the border was closed. So there's less of them, maybe not in his little particular area, but I got to go with what the issue is there's not enough cattle to go around. And, to say it's a problem, most of us cattle guys would say it's a problem for the packer, not for us. It's our turn in the saddle, so it's an issue, not a problem.
Gotcha. All right. Another listener question was put in, and this one kind of looks, you made it mention of it there too, that the market does not like uncertainty. So it's the future's job to look out and see what's going to happen 3, 6 months, 12 months from now. The question is, what's Brad's best guess as to cash prices as we get into the first half of 2026? What do the fundamentals tell us? What do the technicals tell us? What are you looking at?
Emphasis on guess. Okay. These are hard questions for anyone. I'm going to give you a guess, and I'm going to give you my reasoning, but know that it's a guess. I think sometimes our group of commodity brokers likes to come off like a know-it-all, and I certainly don't know. But I'm going to guess. Okay. I think I've given you an adequate disclaimer, right? If the border opened tomorrow, and it's not, okay, if the border would open tomorrow, and I don't believe it will, you still cannot change largely the supply of cattle, certainly for the first quarter and really for most of the second quarter. You can't change supply. They're not going to bring in 1,300 pound cattle. Most likely they'll bring in these lightweight type cattle because the other ones have found a place at a feedlot now. So I think the die is cast for what we've got for a supply. I believe that there has been maybe not a huge amount, but that there's been some heifer retention, which would tell me that there's a smaller supply of cattle in the first quarter of this coming year than we had last year. Okay. And it was pretty tight last year, as you recall. So, from a supply side standpoint, I think the numbers are even tighter then than they are now in the first quarter, especially late first quarter, early second quarter. So that would lead me to think that we could make new highs there. Could we get to 250 or so on cash cattle? I believe that we could. Now, supply and demand. So you got this whole, cloud over the market now with, is this president going to stomp his foot and figure out a way to get prices down now that we seem to almost be in a feud about it, with the cattle industry? Has he got other ideas that could, prompt that? Is the economy, I don't know, our new stock market all-time highs here while we're talking about it right here. So, there's some segments of this thing that seems like most of the economy is probably pretty good. So there's my guess, barring some kind of weirder than we've had the last couple of weeks event. I think if we can get through, we'll muddle our way through Thanksgiving, start to see if we don't get that middle meat buy that we've had the last few years as we get to the first week of December. I think we will see an improved cutout. We'll see less cattle at late December, January, and then we'll see where we go from there. But I think we got a little more than a little bit of an issue here for a month or so here yet. But hey, 230, we could live with that, guys. If we can stabilize there, I think the market will stabilize as well.
Okay. So I guess just as we wrap up here, keys for the rest of the week. Like we said, we've seen some 20,000 head or so trade in the north. The south has been pretty quiet. I guess thoughts for the rest of the week. It seems like there's a test in the north. Now we're just waiting for the south, huh?
They ought to be premium, not because their cattle are better, but because they have less of them, Chad. So I mean, could the south get 232 or 3? I think they can. And it'll help along here with this nice little bounce you're getting on a futures market here. If we can sustain that into Thursday, Friday, that'll help. So I think you'd stabilize the cash. There seems to be an interest on the packer to own a little bit of inventory. Hey, boxes are still pretty good price here, guys. We've flipped this what the packer can pay and what the margins look like for him a long ways here. So you've got, unfortunately, you got enough headlines to choke a horse. Trump in China tonight, right? Probably around midnight our time. Then we expect that there's going to be a Trump Brazil culmination of what supposedly has been negotiated. So we'll see if that comes to light. And you've got Secretary Rollins meeting with her counterpart in Mexico. I'm sure the topic is the border. I would say that that's less likely, but it's the surprise, of course, that makes you wonder about it, right? So a lot of stuff in the headlines. Keep your tennis shoes on. Stay ready to go.
Keep the seatbelt low and tight across your waist, and we'll see what happens next week. In the meantime, if folks would like to reach out and kind of walk through some of these things, and maybe more importantly, have a risk management plan that protects your operation, certainly can do that, right, Brad?
Well said. Thank you for that. Yes, and we've talked about some of the worry of the market here, for weeks and weeks, haven't we, Chad? So anyway, kkvtrading.com is the website, but give us a call. We got 4 brokers here. We'd love to talk to you. 712-722-0023.
Good to talk to you, Brad. I appreciate the expertise. Again, that's Brad Kooima and Varilek at Sioux Center, Iowa, joining us for this edition of Cattle Call. And again, be sure to put your comments or your questions in the area below, and we'll try and answer those in future programs of Cattle Call. Brought to you by Wolf Auto, small town strong. Have a great week. We'll talk to you next week on Cattle Call.